Hello and welcome to Yadnya Investment Academy. Today we are going to discuss about NPAs, that is non-performing assets. In the last 3 years, you must have heard a lot about NPAs. In this video, we will try and understand what are NPAs, their classification, what are the causes of these non-performing assets, and how are they impacting the Indian banking system, and what are the steps being taken by government to tackle this problem. So first is, what are NPAs? A non-performing asset is a loan or advance for which the principal or interest payment remained overdue for a period of 90 days or more. A bank lends money in form of loan, and if the person or firm is not able to give back the interest or principal amount for 90 days, then bank puts such loan as non-performing. Now it is classified into 4 parts. First is standard assets. A standard asset is one in which the borrower fails to make repayment regularly and it is not on time. Second are substandard assets. A substandard asset is one which has been non-performing asset for a period not exceeding 12 months. The third is doubtful assets. A doubtful asset is one which has been NPA for more than 12 months. And fourth is loss assets. A loss asset is one where the loss has been identified by the bank through the internal or external auditor or by the central bank inspectors. Mostly assets which are NPA for more than 36 months are automatically considered as loss assets. These assets are mostly written off by subtracting any recovery value of the security which has been held by the bank. Now we will discuss causes of these NPAs. First is willful defaulters. A willful defaulter is a person or organization which has defaulted in meeting its loan obligation or repayment obligation to the lender, like bank, even when it can honor these obligations. So one of the best example of willful default is Kingfisher Airline. These are most dangerous form of NPAs and usually accompany criminal proceedings against the defaulter. Second most common are industrial crisis. It is one of the external factor affecting NPAs in the country. Industries depend on banks for fulfilling their requirement on funding various of their projects. In case of crisis in industry, companies may find it difficult to pay back their liabilities, which puts them into NPA zone. Big reason for increasing NPAs in India in last few years was very slow growth in capital goods sector such as metals, engineering, infrastructure, etc. Top NPA companies identified by RBI, which means these companies have highest loan default against them. Out of them, top 4 companies, Bhushan Steel, SR Steel, Bhushan Power and Steel and Monet Ispat, all are steel producers and have aggregate loan default of more than rupees 1.5 lakh crores. And then there are infra and engineering companies as well, such as Lanco Infra, Era Infra Engineering and JP Infra, which defaulted as well. Now NPAs of these kind of companies become good once industry sector comes out of recession. Third is lenient lending norms. Lenient norms by the lender is also one of the prime reason for rising NPAs. Overestimation of financial status and credit rating by banks for famous industry names are one of the reasons of NPAs too. Amtech Auto fits in this category where both credit rating agencies and bank overestimated their credit worthiness. Fourth is credit distribution mismanagement. Now misuse of funds by the borrowers also leads to NPAs. Like some borrowers bribe the bank officials and get the loan approved with the sole intention of default. Clearly, Nirav Modi company falls under this category. Now let's understand how are these NPAs impacting the Indian banking system. The Financial Stability Report of 2017 released by RBI states that India's gross NPAs was at 9.6%. This figure is the sum total of all stressed assets held by lending institutions in the country, including cooperative and small banks, in addition to government and private banks. India has second highest ratio of NPAs among the major economies in the world. Only Italy with 16.4% NPA has more stressed assets. China, whose economic growth is largely fueled by loans, has only 1.7% NPAs according to IMF. Now, according to latest figures of December 2017, this figure of 9.6% has actually increased to 10.4%. Now, dissecting this 10.4% figure further, among Indian banks, IDBI Bank has the highest NPAs and tops the list of lending institutions with highest exposure to NPAs at 24.11%. Indian Overseas Bank has 23.6% NPAs, while fellow private lenders such as Kotak Mahindra and SDFC fare much better with only 2.58% and 1.24% gross NPAs respectively. State Bank of India, which has the most stressed assets in absolute term, has gross NPA ratio of around 10%. Now let's discuss how these NPAs are impacting our economy and the industry. First is profitability. NPAs put huge impact on the profitability of the banks as they stop to earn income on these stressed assets on one hand, and they have to keep aside some capital to make sure that there are no liquidity impacts for the depositors because of these probable NPAs default. And this is called provisioning of assets. Each type of NPA has different provisioning ratio as prescribed by RBI. Example, substandard NPA has provisioning ratio of 15%, which means bank has to keep aside 15% value of these NPA assets as liquid assets with them, and this ratio increases as NPA category worsens, and these capital which they keep separately are considered as their liabilities. So this provisioning badly impacts the overall bank's profitability, and because of this many of banks, especially PSU banks, are showing huge losses in their recently concluded quarterly results. Second is asset contraction or credit contraction. The increased NPAs are putting pressure on recycling of funds and reduces the ability of banks for lending more, and thus results in lesser interest income for the bank. It contracts the money stock, which may lead to economic slowdown even. It also is adding too much scrutiny in corporate loan dispersal by banks, which is bringing inefficiencies in the system and is taking some of the industries to the slowdown. Third is liability management. In the light of high NPAs, to improve their profitability, banks tend to lower the interest rates on the deposits. On one hand, deposits like FDs and savings bank, etc., and likely to levy higher interest rate on new and old loans to sustain their net interest margin. So this is net interest margin. So this may become hurdle in smooth financial intermediation process and hampers banks business as well as economic growth. And this is the biggest reason of slow reaction of many banks in decreasing their loan rates, even though RBI decreased repo and reverse repo rates few months back. Next point is that it may impact the public confidence in banking system as well, because it shakes the confidence of public in the soundness of banking system. Increased NPAs may even pose a liquidity issues in the future. And already because of these NPAs, the banking stocks are taking a huge dive. Thus, this increased incidence of NPAs is not only impacting the performance of the banks and the banking system, but overall economy as well. And NPAs is actually one of the big reasons of decrease in GDP in last few quarters as well. Now the last we will discuss about the steps being taken by government to tackle this NPA problem. While the increase in NPA is problematic, its increase since 2015 after RBI's asset quality review in 2014 is a good sign. It means banks are acknowledging NPAs than hiding them. The resulting recognition of true asset quality at banks largely explains the increase in NPAs during these last 3 years. And even as reporting of NPAs rose since 2015, RBI suspected that some banks were still underreporting them. And in April last year, RBI asked all banks to reflect in their notes if their NPAs differed from the definition of regulators. As a result, some of these banks were heavily fined for underreporting bad loans. And there are many things which government has done in last few years to solve this problem. First is Banking Regulation Act is amended to give RBI more powers to monitor bank accounts of big defaulters. Amendment in the banking law will enable setting up a committee to oversee companies that have the highest or the biggest defaulters of loans, and that will help in reduction of NPAs hopefully. To recover outstanding loans, a slew of legislations, including the big one, IBC, that is Insolvency and Bankruptcy Code, was passed by the Parliament, which helps in easy liquidation of the defaulters. These two acts were amended. Debt recovery tribunals were also set up to fast track proceedings of liquidation. Amendments are aimed at faster recovery and resolution of bad debt by banks and financial institutions and making it easier for asset reconstruction companies to function. Along with this new bankruptcy law, which came into effect earlier this year, and amendments will put in place an enabling infrastructure to effectively deal with these non-performing assets in Indian banking system. Last is the RBI this February announced a complete overhaul of the asset resolution process, setting a strict timeline and criteria of reporting NPAs and resolving them. So there's a lot of activity by the government which is happening in this area, and hopefully things should start improving in next few years. That is all we have on this topic of NPAs. If you have any question on NPA topic, please do write in the comment section below, and do not forget to subscribe to our channel for more such videos. Have a great time ahead. Jai Hind.